Hello, everyone. Trader Razor here from Conquer Wall Street. It's January the 24th, and I am thrilled again to share my long term technical analysis of the major stock market indexes, stock sectors, Bitcoin, and a few of our trading systems built for busy investors that work during normal trading hours but want to profit from easy to follow end of day trading strategies. Now, I know that some of you might be seasoned investors while others are just starting out. That's perfectly okay. If you have any questions at all, don't hesitate to reach out to my support team at conquerwallstreet.com. We're here to help you navigate this wild world of investing. Remember, this analysis is just one more tool in your toolkit to help you gain insights into the markets. Hey guys, what a week it was in the markets. The S&P 500 hit new records today, and it's looking more and more like we're on track for a second big weekly gain. This is all happening as people get more optimistic about the start of President Trump's second term. His pro-business policies have really got investors excited, even though he hasn't taken formal action on tariffs yet. Today, we saw the S&P 500 and the NASDAQ both up around 2% for the week, and the Dow is up even more at 2.2%. It's like the bull market is back in full swing after that rough patch in December. And just yesterday, Trump was making waves by calling for interest rate cuts and asking OPEC to lower oil prices. Markets seem to be hanging on to his every word right now. And regarding those interest rate cuts, President Trump was at the World Economic Forum over in Davos. He's been pushing hard for lower interest rates, saying he wants them to drop immediately, not just here in the United States, but worldwide. It's a bold move, and it seems like he's ready to put some pressure on the Federal Reserve to make it all happen. Now, we all know Trump and the Fed haven't always seen eye to eye. He's had a rocky relationship with Jerome Powell, the Fed chair he appointed under his first term. Trump even compared Powell to a golfer who struggles with putting. But despite their past differences, Trump is hopeful the Fed will listen to him this time around. He mentioned that he has plans to chat with Powell when the time is right. The markets are all keeping a close eye on all of this, but it's important to remember the Fed values its independence and doesn't like making decisions based on political pressure. Now, that all being said, Trump is sticking to his guns, blaming the inflation surge under former President Biden on excessive government spending. So let's see how this all plays out. It's an interesting time for monetary policy, and Trump's remarks have certainly added a new twist to the conversation. Next, let's take a couple of minutes to talk about some big news that's been making waves lately and could potentially kill the Trump pump we're seeing in the markets. President Trump has announced plans to impose tariffs on products from Canada, Mexico, and China starting February 1st. These countries are some of our largest trading partners, so this could really shake things up in the stock market. The current idea is to put a 25% tariff on goods from Canada and Mexico and an additional 10% on Chinese products. The goal here seems to be about getting these nations to tighten up their borders and tackle issues like immigration and illegal drugs. It's a bold, big move, and it's got a lot of people talking. Canada, Mexico, and China are critical to our economy here in the United States. Let's give this a bit of perspective. We share between these nations over $1 trillion in trade each year. So if these tariffs go into effect, it could mean higher prices for everyday goods and a potential mess for businesses that rely on international supply chains. This might not kill the rally we're seeing in markets. It's my understanding that these leaders in these countries are already taking steps to address some of the concerns Trump has raised. They're trying to work things out, which might mean these tariffs could be avoided or lifted somewhere down the line. It's a very tense situation, and we'll have to see how this plays out. In the meantime, let's keep an eye on how these discussions evolve and hope for solutions that benefit all the nations involved. And then we have some exciting news in the world of cryptocurrency this week. It all begins with World Liberty Financial, a crypto pop project backed by President Trump. To celebrate his inauguration as the 47th president of the United States, the platform made some significant moves in the crypto space. They bought 47 million each in Ethereum and wrapped Bitcoin. Now, wrapped Bitcoin is just a version of Bitcoin that works on the Ethereum blockchain. Folks, this is a big deal because it shows their bullish commitment to embracing the future of digital currency. But World Liberty Financial didn't stop there. They also invested $4.7 million in other cryptocurrencies like Tron, one of my favorites, Aave, Chainlink, and Athena. This is all part of their strategy to build a strong decentralized finance platform where people can borrow, lend, and earn interest on their crypto holdings. To me, it's very interesting to see how Trump and his family are promoting this project. They're not just talking about it, they're actively involved. A company connected to Trump will even get a significant portion of the project's revenue. Now, these moves are worth watching. It's a sign that people in position of power are recognizing the potential of decentralized finance. So let's keep an eye on how this unfolds and what it means for the future of money. And then we have the latest XRP news. Get this. Recently, Mark Yusko, the CEO of Morgan Creek Capital, made some interesting remarks about Ripple's XRP. He mentioned that there's a lot of chatter about the possibility of XRP being used as a base layer for national banking under the new Trump administration. Imagine that. Imagine what that would do to the price of XRP. This could mean huge things for XRP, moving beyond just a tool for cross-border payments. There are even rumors that the government might be considering a strategic reserve that includes XRP alongside other US-created cryptocurrencies like Hedera and Cardano. This seems to have gained traction after some high-profile meetings between Ripple's CEO, Brad Garlinghouse, and the Trump family. Now, we have to keep in mind, though, that just before Trump's inauguration, XRP's price surged by 45%, almost reaching its all-time high. It's fascinating to think about how cryptocurrencies like XRP could play a bigger role in our financial system. If XRP becomes a part of a central bank digital currency or something similar, it could really shake things up in this space. With the big news out of the way, let's move on to the equity market analysis from a long-term perspective for the week ending January 24th. And we start off with the monthly chart of the S&P 500. If you've been following this channel, if you've been following my updates, you saw the cup and handle pattern that we see on the monthly chart, and you see the breakout from that, and it's been off to the races for the S&P 500 ever since. That's going all the way back to early 2024 when that breakout from about the 460 level happened. And what I keep mentioning over and over again, I sound like a broken record, I know, but in a healthy market, a healthy long-term market, you see these bull market touches that come back and they touch again this 50-month moving average. And we haven't really had a pullback to the 50-month moving average since 2023. It's over 2 years since we've touched this 50-month moving average. And with all the stimulus that was pumped into the economy post COVID, we see that we're quite extended, and a correction down to the 460 level would be where we would need to come back and retouch this 50-month moving average. So the on a monthly chart perspective, the market looks very extended. But you see this hammer type candle. It's not a complete hammer, but it's a very bullish candle we have uh, for the month so far of January 2025. So we'll see how the month ends, but things look bullish on a short term perspective. But long term, we are quite extended from where we should be at normal levels on a monthly chart. And we see the same thing with the QQQ, the NASDAQ Trust Exchange Traded Fund. We are quite extended. But what's interesting when you look at the NASDAQ, you see this long-term trend line going across the bottom where we have a number of touch points. But you see it really just took off from that trend line. And you could conceivably, from a long-term perspective, have a pullback and a correction all the way below 275 to 275 on the QQQ and still be in a long-term uptrend, a long-term bullish market from a monthly perspective on the Qs. And that would be a correction of 50%. That's astronomical. That blows my mind. But as long-term investors, you always need to have that in the back of your mind that we are that far extended from a long-term trend line that goes all the way back to 2016, almost 10 years in the making. And here we have the Dow Jones Industrial Average. The same thing applies here. It's not quite as extended from the 50-month moving average, but we see this nice little range it's been trading in. It did extend outside of that upper trend line that we have here for the Dow Jones Industrial Average, and it quickly closed back inside the following month. Now we're putting in a bullish candle on the Dow Jones Industrial Average. But for me, from a very long-term perspective, I'd like to see it come back and retouch this lower trend line, somewhere around the 50-month moving average, to really get excited about the Dow Jones Industrial Average or any of the major indexes at this juncture, in my opinion. Here we have a weekly chart of the S&P 500. You see a nice little channel going upwards. You see an upward slope 50-week moving average and an upward slope 200-week moving average with the 50 trading above the 200, all bullish. This looks very bullish coming out of this cup and handle break that we see going back to 2022 through 2023. Things look great for the S&P 500. I would become a little bit more concerned if we break down below this lower trend line. We did get that correction in the intermediate term where everybody was worried about the new incoming administration, and there's some worry about the tariffs and all these little things that kind of shook things up in the market. But we're still holding this lower trend line on a weekly chart. And from a long-term perspective, until that is taken out, there isn't really any need for caution in the markets from a long-term perspective. And here we see that same type of channel on the QQQ. The 50-day moving average is within that channel as well, and the 50-day is trading, sloping upwards. It is above the 200-day moving average. It all looks bullish for the sector. We are in the upper portion of this channel. It would be nice for me to add more cash, or anybody else that might be interested might be looking for a pullback closer to this 475 level on the QQQ to give them a little bit safer entry point. That being said, in the near term, it looks like the markets want to break out to new highs, especially in the S&P 500. Technology, or the QQQ, has been lagging a little bit under the S&P 500. We'll see how that plays out in the near term. Here we have a weekly chart of the S&P 500 showing that divergence that we've been talking about for a number of weeks now. This divergence accurately predicted the pullback that we had over the last couple of weeks in the S&P 500. You see the RSI diverging as prices were continuing to make these higher highs. You saw the RSI not supporting that. What gives me a little bit of caution, as the S&P 500 has just touched new highs this week, we didn't have the RSI confirm it by breaking out above this sloping trend line. That would give me a little bit of pause that once we're touching these highs, that it could just be a fake out. It could just be the markets taking out all the buy orders at the new highs, and then there's going to be a little bit more of a pullback or a little bit of more of a sideways movement in the market before moving higher. Like I said, we'll watch this RSI. We want to see a breakout above that trend line to give us confirmation, bullish confirmation to the upside. Then we have the QQQs, the same type of patterns played out here, where we had the market hitting the higher highs, but there was divergence in the RSI. Then we move on to the daily chart of the S&P 500. There's a couple things going on here. First of all, we talked a couple weeks ago about this head and shoulders pattern that we had here. We have a little bit of a left shoulder here, the head, and a right shoulder. And I said if it breaks down below here, we have the possibility for a measured move down to about the 200-day moving average of a price around 560. Well, what happened with the Trump administration coming in, we did get a breakout, but it quickly regained that broken neckline. And then the S&P 500 went all the way back up to the highs, and it did touch above those recent highs that we see at the end of December, mid-December. It did touch above them, but as of today's candle, we have a little bit of a bearish candle where it looks suspicious as to we might have just run all the buy orders that are up above the all-time highs, and now there's a little bit of selling pressure coming into the market. We'll keep an eye on this. A pullback to the 50-day moving average would be healthy. It might even be a nice area to add to positions if you're bullish from a long-term perspective. QQQ, you see it's been underperforming the S&P 500. There's the all-time high in the Qs in December, but we haven't quite tagged those all-time highs around 539. So this particular index has been lagging the S&P 500. And here's something that was really interesting. We saw this bounce just about 2 weeks ago, and we saw this coming because when we look at the advancing declining issues of the overall market and the advancing declining volume, we saw a bit of a divergence here where there was momentum building in the advancing declining issues, and there's also momentum building in the advancing declining volume. While the market was making lower lows, we saw that divergence come in and it played out. So we got a significant bounce in the market, and we'll see how this goes moving forward. But we did get that anticipated bounce. How much more room it has to run, I do not know. But we did see that these charts predicted for us that we have a short-term bounce in the making. Next, I always want to talk about the percent of stocks above the 200-day moving average. We compare this to the overall market for signs of weakness and an impending pullback. We did have that diversion in the S&P 500. I won't continue to talk about that, but that did play out and it led to a correction. Interestingly, though, the market is hitting new all-time highs, and the percent of stocks above their 200-day moving average has not crossed above this trend line. So it does give me a little bit of caution. In a healthy market, you like to see all these companies moving together. You want to see a large number of companies moving up together, and a significant portion of them have not moved up above their 200-day moving average like they were earlier or late last year. And here's a shot of the percent of stocks above their 50-day moving average. And we talked about that consolidation pattern that we had going into November, December. And we also talked about the divergence that we had in price, and it did break down to the downside. But here's that other thing that we had when we were talking about the bounce that was going to come in the market. We were talking about these oversold conditions, that when the percent of stocks below their 50-day moving average reaches these extreme lows below the 30 level, typically a break back above 30 leads to a significant bounce in the markets. And that's exactly what we got. We got that break above the 30 level, and it's been up since then, which is great for the market. We'll see how this pans out moving forward. Onto the Qs, we have the percent of stocks above the 50-day moving average. We had the same consolidation pattern, the same breakdown, and the same move from below 30 above, signaling a buying opportunity. Here's the Qs and the percent of stocks. Looks like a duplicate chart. I apologize for that. And then we'll move forward to the Conquer Wall Street stock sector analysis for the week ending January 24th. And when we look at the sector heat map for the last 5 days, we see that we had a significant move in the technology sector. Now, the question you might be asking yourself, was that the Magnificent Seven, the Apples, the Amazons, the Microsoft, the Alphabets, which have been leading and have been taking up a large portion of the weighting in the S&P 500 and other indexes like the technology sector. Were they the companies that have been pushing up this big move in technology? Well, we're going to talk about that in just a second. So not only did technology outperform over the last 5 days, but we saw some of the typical sectors like consumer discretionary outperforming. But surprisingly, some of the beaten up sectors like healthcare put in a pretty good week. So let's see where the money's been moving this week. The first chart I like to start off with is the equal weighted S&P 500 compared to the S&P 500. As you all know, a majority of the S&P 500 is weighted to the Magnificent Seven. So when the equal weighted outperforms, it is a healthier sign to me that the move in the market is diverse, and a lot of companies are participating in that. We did see as the market was hitting higher highs that a lot of money was going into those Magnificent Seven stocks because they are weighted as to 30% of the S&P 500 index, or even more than that, I should say. But lately, for the month of January, we're starting to see more participation. The equal weighted sector has been performing better over the last 2 weeks or so. And that is bullish, in my opinion, from a longer term perspective. I want to see the RSP leading the S&P 500. So let's take a look at the Magnificent Seven as illustrated by the MAGS ETF, which is the holdings of the Magnificent Seven companies. We see a little bit of weakness here. So as we're getting this rally in S&P 500 over the last week or so, the Magnificent Seven hasn't been performing quite as well. It has been that diverse move of other companies. Maybe we're seeing a move into value. Well, one thing we also take a look at is whether growth stocks or value stocks are performing better. Typically, when we see growth outperforming, that is a positive sign for the markets. And typically, when we see value outperforming, it is a sign of an impending correction. Well, what we see here is growth hasn't been participating in this move upward. That gives me a little bit of caution. Maybe there's a rotation into value, but as we're hitting new all-time highs on the S&P 500, we're not seeing a move in growth that supports that. So that does give me a little bit of caution moving forward. That's worth keeping an eye on. Also, the same thing with the mega caps. There was a big rotation the last few weeks into the mega cap companies. A lot of those would be your Magnificent Sevens, but also companies like your Walmarts. And we see as the market's been moving up this week that the mega caps have underperformed the overall market. But one sector that has remained strong is Bitcoin compared to the S&P 500. We're seeing a lot more and more investment capital moving into digital currencies and specifically into Bitcoin. There's a lot of news to support that. As we discussed earlier, there's a possibility of a Bitcoin strategic reserve, and we have a pro-digital currency administration in power currently. So where this leads with the digital currencies, we'll have to keep an eye on that. But the top performing sector where the money's really been moving, in my opinion, is into Bitcoin and the other digital currencies, select digital currencies. So how do we play this here? So, well, in Conquer Wall Street, we've been playing this with one of our best performing end of day trading systems, which is the S&P 500 ETF or the SPY ETF. Here it is with our Momentum Matrix Pro trading system. And you can see that this has just been buying the dips consistently over and over again and picking out winners. So we have a buy back in September, which was sold for a profit. You see another buy in November, which was sold for a profit. And then a dollar cost average into two positions in this dip that we had just recently from the end of December into early January. And look at that. Both of those positions are in a profit. Congratulations to all you members who are trading these end of day systems. It's really easy. You get your email, you see what the buy signals are, and you make a decision for yourself whether or not you want to buy or trade these systems. And this particular system has an outstanding historical average. When we back test it, 93% of the trades over the last 10 years have been profitable. There were 61 total closed trades, a profit factor of 48.164, a max drawdown of 3.79%, and an average winning trade of 2%. And what's really neat about this is it's ideal for busy professionals that work during the trading day because you get your signals at the end of the day. And this has an average holding period in this system of 16 days. So you don't have to worry about constantly trading every 5 or 10 minutes. You get your signals, end of day, you make a decision to buy or sell at the open the next day based off of those signals. And then we back test for you the historical performance of each of these systems. But one of our top performers this week has been the technology sector. It has been a prime performer, but we have a really bearish candle here going into today, a bearish engulfing candle. Is that part of the MAG's pullback? Well, the technology sector exchange traded fund holds a lot of weighting in those Magnificent Seven stocks. We'll have to see how this plays out, but it did tag a new all time high. It is above its 50-day moving average. The 50-day moving average is sloping upward, and so is the 200-day moving average. The sector looks like it's going to perform well moving forward. And if you're investing in this sector, I think you're going to be okay. Uh, we'll see how the money rotates moving forward. That being finished, let's go forward into our Bitcoin analysis and our digital currency analysis for the week ending January 24th, 2025. We'll start off with our ever popular review of the Fear and Greed Index. Over the last couple of weeks and months, we've been hovering up around the greed level. Last week, I think we were about a 74 reading on this, and now we're at 75. And about a month or so ago, we were even higher. We were up around 80. And as I always like to point out to everybody, always be careful when we're at these greed levels on this index. If something would go wrong, for some reason the bullish sentiment would change in the digital currency space, you could see a massive correction like we've seen historically in assets like Bitcoin or Ethereum. We also like to take a look at the flow of funds by asset class. We always check on coin shares to get a review of where the money has been moving in these assets. We see a lot of money, a whole lot of money moving into Bitcoin. We see a lot of money over the last week moving back into Ethereum, which has been quite volatile. We see money moving in and out of this asset class of Ethereum from week to week. It's really inconsistent as to whether or not money is moving into Ethereum and whether or not it's moving out of Ethereum. It is very, very hard for me to tell from a longer term perspective if investors are just trading this asset class or if they're starting to hodl this asset class just based off of these reports that come from coin shares. But one thing that we do notice is starting to pick up is a lot of money has been flowing into Ethereum. Just over the last couple of months, we see more and more of a rotation into this asset class. And this is something that has been trending sideways for a long time. So I haven't been able to build a trading system for XRP Ripple. But if it continues its momentum and it keeps trending upward, this is something that we should be able to build a system on. And if you're not a part of our mailing list, I would encourage you to get on that mailing list at conquerwallstreet.com so you could be informed right away when we do have a trading system added to our portfolio of trading systems for XRP Ripple. Next, we'd like to take a look at the long-term holder supply. Historically, we'll see when Bitcoin makes large moves to the upside, a lot of long-term holders start to sell into the rally, and then it bases out for a period of time. And then during that basing period, they start to move back into the asset class. You see that happening back in 2017. You see that happening in 2021, whereas it's making new all-time highs or selling those highs, and then we get a long basing period. Well, we're kind of seeing that same thing happening now. Bitcoin is pushing up to these new highs, yet we see the long-term holders are selling their supply. Does this mean that we're going to base out sideways in Bitcoin for some time? It's possible. But for me to really get bullish on a big move in Bitcoin, I'd like to see long-term holders starting to buy back into the asset class. And we also take a look at the spot Bitcoin exchange traded fund flows. This looks very bullish for the month of January. We're seeing a lot of money moving into Bitcoin. We also like to look at the inflows and outflows from the cryptocurrency exchanges. And we're starting to see also pretty consistently money is flowing off of the exchanges for Bitcoin. Another very bullish sign. People are hodling the asset class. They're not putting it on exchanges to sell. This bodes well from a long-term perspective. Onto the charts, we have up first our weekly chart of Bitcoin. We see it just tagged a new all-time high not too long ago at 109, $356 per token. We have not broken out from that. But when I look at this chart from a long-term perspective, one thing that stands out to me, that's the volume profile. When we look at the volume profile, when we had this period ranging between 2024 and 2025, we saw a lot of volume build up on the volume profile in Bitcoin. And we had a lot of sideways action in the price at that point. And then we have a breakout. So when I look at it, we see this sideways action going into the end of the year and into the new year. And we're starting to see the volume profile build up again. There is, in my opinion, the potential. We have this little bit of an uptrend line here going back from September that we could just trend sideways and we could touch this trend line before we get a breakout. That we start seeing the volume profile build up. Hodlers are going to come in and are going to keep it in this range between 109 and 93,000, and it's going to touch this trend line and push to highs from there. Or maybe we get a breakout or a breakdown based off of news. Like I said, the greed index is very high. This is a very volatile asset class. But from a weekly perspective, the technicals look pretty good. The 50-week moving average is trading above the 200-week moving average. And we have this long-term trend line all the way down here going from 2023. A worst case scenario, I think you get a pullback down to about 50 some thousand and touch this trend line, and you're still in a long-term uptrend for Bitcoin. So you need to know this if you're a long-term investor in this asset class, that you could still come back to $50,000 and still be in a long-term uptrend. Here we see this cup and handle pattern on the weekly chart. See the nice little smiley face here. Here's your cup, there's your handle, and there is your breakout. I also have the RSI out here because I keep pointing out this divergence that we have between the price of Bitcoin hitting higher highs and a divergence in the RSI. If you remember from earlier in this video, we saw a negative divergence play out in the S&P 500. Time will tell if we get the same type of play out in Bitcoin itself. Now, to make a contrarian argument here, when Bitcoin becomes overbought on a weekly chart, we usually see very large moves to the upside. We see this back in October. It became overbought, and the price of Bitcoin quickly moved from 30,000 up to 60,000. And now we are also in an overbought condition. And we got Bitcoin made a big move from 70,000 up to 100,000. So what I'd really like to see is this RSI cross above this down sloping trend line to get really bullish on here and feel a little bit more comfortable that we're not going to get some type of correction where I'm going to have to dollar cost average into my position. Here we have the daily chart, and we see the 200-day moving average and the 50-day moving average trading above. It's very bullish. You see our all-time high on here, but we see the volume profile, the basing action we have going on here. We see the volume building up as we're basing between this $93,000 and $110,000 price point. And one thing I want to point out, when we look earlier in the chart going from July through November, we just see how the price just waves above and below the 50-day moving average and just bases that way right around the 50-day. And we're kind of seeing the start of that again. We're just kind of have the 50-day moving average, just a little bit of basing up and down. So that's where this theory comes in that possibly we could come out here and just base for an extended period of time until we tag this trend line and then break out from there. Let's move forward and talk about Ethereum a little bit. We have our spot Ethereum exchange traded fund flows, and this doesn't really give me any excitement here. And that goes back to that CoinShares report too. It's just very volatile whether the money's moving into Ethereum or it's moving out of Ethereum. But even on the exchange traded funds, we don't really see any clarity. We don't really see any extreme bullishness or extreme bearishness in this asset class, at least from a flow of funds in the exchange traded funds. This really isn't helping me out a whole lot. And also the chart of Ethereum wasn't quite as bullish as we're going to see in the next couple of slides here as it is for Bitcoin. Ethereum spot inflows and outflows on the exchanges. We see hodling action going on the exchanges. You see the coins coming off the exchanges. This is bullish from a long-term perspective. So let's take a look at the charts. Weekly chart of Ethereum. As I've been pointing out, we have the all-time high around $100 per token. We have what looks like a double top in here, um, but we're just kind of consolidating. I've been saying it for weeks. That hasn't changed. Yes, the 50-week moving average is above the 200 month. So I'm sorry, the 50-week moving average is above the 200-week moving average, and they are both sloping upwards. But it just looks like we're chopping around in here between 3750 and 2750 until we get a break out of this range and maybe take out 4100 and maybe retest 4800. We really need to see some constructive building going on here. Other than that, it's just going to continue to consolidate for quite some time until we get a change in direction, either to the upside or the downside. Here we're going to zoom in, and we're also going to take a look at the RSI, and we see a divergence. Well, we actually have a double top here, and it's divergent from that double top. The RSI has not hit an overbought position like Bitcoin has, but it does run when it gets overbought, as you see here, going back to the 2024 period where it became overbought, right around 2,400 and ran up to almost $4,100 per token. And here's a zoomed in picture. You see the 50-day moving average starting to roll over, and you see what looks like a range bound between the 50-day and the 200-day moving average, just kind of bouncing back and forth here. We do have a series of lower highs. That's worth keeping an eye on, but there's nothing really significant in the volume that stands out at me and jumps out at me. It just looks very like it wants to range in between these two moving averages until we get a decisive breakout. Maybe we need something in the news that's really going to push this up a little bit more. Really, the news has been light on Ethereum. We'll see if that changes moving forward. And then finally, I want to show you the XRP chart. I know we talked about it earlier in the news, but this is the daily chart. And you see we just had that huge move where back in November, this was just a 60-cent token. And now we're trading up over $3 per token. Congratulations if you bought that. We have no system because it's just been ranging for so long. And if there's no trend, you can't make a system to trade this profitably. But take a look what's happened here. We had this big consolidation zone between $2 and $2.60 per share. A lot of volume built up in the volume profile. Then we got a breakout, a big significant breakout. And now we have what looks like a little bit of a triangle building here. And whether or not it breaks out above there or not remains to be seen. But this looks very bullish, this little consolidation triangle that we have here. I'd be watching for a breakout on volume, and we might get a heck of a run in XRP moving forward if that happens. That's all I have for you folks. If you have any questions or concerns, please feel free to reach out to us at conquerwallstreet.com and fill out a support ticket.